Good morning, ladies and gentlemen, and welcome to the Cornerstone FS PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. And before we begin, as usual, I would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to CEO James Hickman. James, good morning, sir.
Good morning, and thank you. First of all, a little bit of background. Obviously introduced as Cornerstone FS PLC, which is in fact correct, but we've transitioned over the business to trading under the brand Finseta. The idea is that the PLC actually will become Finseta at some point very shortly, but we're currently, the PLC is still Cornerstone FS. Moving on to who we are, what we do. We are a payments company, ultimately solving currency and payment challenges, and importantly for businesses and individuals around the globe. And that's very important. Part of our differentiator is that we not only service business, but we service high net worth individuals as well. Ultimately, all of our customers come through a growing network of introducers. By introducers, they are accountants, lawyers, wealth managers, property agents, etc. And we've invested very heavily over the last 18 months or so into growing that segment of our revenue, and that's through people and systems, and we'll come on to that in a minute. It's all done on proprietary technology. The business historically has been more of a software business, and we're leveraging that expertise. We've got a great platform which we're continuing to build on, and one of the key things that it does allow us to do is to integrate into ultimately many different payment partners, banking partners, etc., to allow us to offer, you'll see on the right hand side there, number of currencies and number of countries served, and that we continue to expand. We are very much focused on providing solutions. So this is ultimately to payment issues that both businesses and individuals have, and we are able to provide through our payment network, our global payment network, a solution to those problems. And one of our key strategies, which we'll come on to, is expanding out geographically to help service those needs. So that's Finseta in a nutshell. Sort of 2023 highlights, and a little look back to what happened in 2023. A real turnaround year for us. We recorded our first maiden profitable and cash flow positive year. 100% growth year on year in revenue. As I mentioned, in terms of people, we've very much focused on the sales activity, and we've made a number of key hires there, and we continue to expand that out in order to expand out our global network of introducers. Again, we've continued to expand out our global payments network in order to service those. Our operations have been significantly strengthened. One of the key regulatory and compliance pieces of last year was the consumer duty brought in by the Financial Conduct Authority, which actually caught many companies unawares. Well, I'm pleased to say we were very well prepared for that. The team did a fantastic job, and we're delighted that we were ahead of the curve there. We also signed a significant deal with Mastercard. This is very much a new product launch for us around commercial cards. And again, I'll come on to explain a little bit more about that shortly. Finally, and this was post year end, but certainly worked towards in 2023, was the granting of a Canadian MSB license by Fintrack. And again, I'll come on to that in terms of the strategy shortly. So there's three key areas to our strategy, and very clearly, I think we're executing against that. The first and most importantly, in my mind, where we're saying future-proofing the business, that really comes under people to me. And that's expansion of our revenue capability, so our sales, our operation, our finance, and compliance. We've recruited some really key people in 2023 that will help drive the business forward in the coming years. We are expanding our product capability, and we're expanding our geographic and market footprint. Ultimately, the latter two really driving value in the business itself, and ultimately helping us able to serve our customers and our introducers more effectively. And how we got along, sort of alongside our strategy, how have we performed, and what are the things that we've done against that strategy? So as I mentioned, we've made some key hires, one of which was a sales director for the UK business. He has brought process, procedures, good KPIs to the sales team, and he's made a significant impact already and is really growing out that sales team, and will continue to do so throughout 2024 and 2025. In 23, we created a solutions team, which, as I mentioned, provides payment solutions to both businesses and individuals that have payment issues wherever they are. We've successfully, and continue to do so, increased our partnership referral network, our partnership payment network. Ultimately, this means that as we grow, this will allow us to onboard and take on more and more customers, and service them more effectively. We are a high-touch business, high-service business, and that very much feeds through to our partnership network to make sure that we're looking after the clients they refer in a manner that they expect. In terms of delivering existing product to new markets, we've laid the groundwork to do that. We now have the ability, through investment in people and systems, to onboard internationally. As mentioned, we've been granted a Canadian license by Fintrack, and the groundwork has started there already to seed that office and to start to build it out. We've added 4 new payment partners and a new banking partner, and we are in discussions with 3 other banking partners, again, to enable us to operate more globally, and strengthen our geographic presence. Against the product capability, we have signed a multi-year agreement with Mastercard. And on the back of that, we've hired a card expert to help drive that card program forward. We're making very good progress in the setup of that, and we're on track to launch Q3, a full product launch. We went through quite a significant vendor selection process, because certainly with cards, it's very important to get the right partners. So we went through a significant vendor selection there, and believe we've got absolutely the right partners to take us forward for the coming years. We've ultimately, being a customer-centric business, we're not just developing product because we want to. We're listening to feedback, we're listening to our customers, and ultimately making sure that we're developing what our customers want and need, and ultimately to hopefully achieve more revenue from our existing customer base, which I think we're seeing with an increased average transaction value at the moment, but also to promote and to increase our rate of customer acquisition. We also spent time and money streamlining and making our compliance processes more efficient and rigorous. And as I mentioned, the implementation of Consumer Duty, I was really delighted with how the team rallied and got us match fit for that. In terms of future-proofing the business, which, as I mentioned, is generally around people, we're continuing to expand in terms, particularly around the revenue side of things. We have increased the number of introducers that we have, and therefore diversifying our payment flows around the globe. We have an increased number of payment partners. Our regulatory expansion, which is critical to drive value. So it's not only having country presence, but it's the regulatory piece and also the access to local banking rails, which is very important. We're making very good progress with that. And as stated previously, we've targeted Canada, the UAE, and we'll be targeting Hong Kong. So Canada has now been done successfully, and we are in process with the UAE currently. We continue to invest in this in the sales team, as I say, both in the UK and consequently in Canada ultimately as well. Just sort of a little bit of a reminder on the technology side of things. This is all in-house proprietary, so it enables us to be flexible. It enables us to connect into multi-counterparty, and really make sure that our global payments network is truly global, and ultimately make sure for our customers that it's fast and commercially efficient. With that, I'll hand over to Judy on the financials.
Thanks, James. Good morning, everyone. Thank you for listening and joining us to review our 2023 results. I think you may have heard me say before that 2023 was a transformational financial year, and it's really great to see these results published, which really I think just proved that. Dare I say, I want to smack you around the head with a couple of metrics, I think which really demonstrate that. So firstly, adjusted EBITDA 1.7 million in 2023 compared to a 0.9 million loss in 2022. A second metric I'll call out here from this selection: 2 million of cash flow from operations compared to a 1 million outflow in the prior year. Of course, that's driven by a top line growth, 100% growth in revenue that you've already heard, and also continued expansion in our gross margin, up 250 basis points. And over the next few slides, I'll dive a little deeper through the detail on each of those. So starting with revenue first, 2023 revenue of 9.649 million, up 100% year over year. I think we've covered this pretty good in previous presentations, but that growth largely driven by the expansion of our sales team and continued development of our introducer network, James has just talked about, including in our Asia team, which really went from strength to strength in 2023. That's further evidenced by our growth in customer numbers, up to 906 in 2023. But moreover, I think is the growth in average revenue per customer. So inferred from dividing the revenue by the number of customers, that up 77% year over year. And I think really demonstrating that we're seeing the benefits of that high touch service-based delivery to our clients. And in addition, as you've already heard, the average trade size conducted on our platform increasing by 33% in the year as well. Moving on to operating costs, or more accurately, adjusted operating costs. So they increased in 2023 by 16%, up to 4.4 million. That 600k growth largely coming from staff costs, owing to the investment in the sales team. We also saw a modest increase in rent and IT costs, firstly from moving to new corporate premises in Q4 2023, and some of those investments into our CRM systems and compliance systems that James just touched on. But I think, this is really demonstrating the operating leverage in the business beginning to drop through to the bottom line. So adjusted costs as a percentage of revenue decreasing 33 percentage points year over year to 46% in 2023. And then moving on to the next slide, turning to profitability, it would be remiss of me, I don't have a slide on it, but not to mention the continued gross profit margin expansion, so increasing to 63.4% in 2023. Improvement really driven by two factors. One is the decreasing revenue attributable to our historic white label partners. That decreased in the year to 5% of our total revenue compared to 22% in the prior year. Secondly, we restructured the commission arrangements with one of our largest revenue generators, so that flowing through there. And the top line growth combined with that margin expansion and controlling costs really mean that we're seeing exceptional growth in our profitability. So you can see, as I say, 1.7 million in 2023 adjusted EBITDA at a margin of 18%. I think moreover the extremely impressive number is the H2 number of 1.5 million of adjusted EBITDA. And moving on to the next slide, I just wanted to give some air cover to our accounting to adjusted measure results. The reason for doing this is really just to point out that we do take quite a prudent approach to that adjusted EBITDA measure. I think adding back share-based compensation and acquisition related costs is a pretty well-trodden path. But we did recognise in the year a 207k profit on disposal of our Avila House subsidiary under the IFRS profit measure that we have excluded for the basis of adjusted measures. And as I've already mentioned, during 2023 we moved into new group premises. They are under a 3-year lease, so under IFRS we actually have no rental costs. It's all amortization related. So again, from a prudent perspective, we've actually increased the adjusted costs to add back the effective cash rent costs. It's not very significant in 2023 because we've just got one quarter, but will be more significant in 2024. Then as we move over on the right into the right hand side, in our adjusted measures we also exclude interest earned on client cash balances. That's on the basis that we can't control the interest rate climate, so not something we want to predict in terms of a recurring kind of measure that we can control. But as you can see, at 350k in 2023, that would have had a material improvement in our adjusted measures had we included it. Lastly, on this slide, just wanted to highlight an item below adjusted EBITDA. During 2023, we recognised a deferred tax asset of 818k in respect of tax losses. That follows our transition to profitability during 2023 and therefore increased visibility on our ability to consume those tax losses. So at the end of 2023, we had carried forward losses of 3.3 million, and we do expect to be paying our kind of first cash tax in September 2026 in respect of the second half of 2025. Moving on, last two slides on cash flow, and I wanted to highlight that we really have very strong cash conversion. Cash from operations 115% of adjusted EBITDA in 2023, and you can see despite that rapid growth of the top line, we really are not a working capital intensive business. Just 0.1 million outflow in working capital in 2023. And on the last slide for me, that really strong cash generation in 2023 means we close the year in a net cash position at the end of 2023. So gross cash of 2.3 million, less the 2.2 million in non-convertible loan notes. as I say, meaning we ended the year at 0.1 in net cash. So we're really in a very strong balance sheet position now to push forward, knowing we can kind of reinvest the cash that the business is throwing off.
So before we move on to questions, just in summary, fantastic year 2023, maiden profitability and cash generation. Again, we've been investing in our sales team for growth now and for in the future. One of the key things is expanding our global payment network and our introducer network, which we're doing successfully. Signing our MasterCard agreement for the new product launch, what can't be underestimated. That is a significant milestone for the business, and we're delighted to have MasterCard as a partner. And finally, the license in Canada, receipt of the regulatory approval by FinTrack, I think gives an endorsement to the business, and the rigors and the regulatory compliance that we have in place today. So overall, 2023 was a significant year for the business, and I think sets us up and gives us the groundwork for the next few years of significant growth. So we have now questions. So if I read them out, and then we will sort of take them in order. The first one: what is the rationale behind the planned sale of Capital Currencies subsidiary, and how does this fit into the overall strategic direction of Finsettia? So Capital Currencies, we've actually sold the license, which ultimately was a small license that was not required by the business. Just to remind you that Finsettia has an e-money license, an EMI, which ultimately is effectively one below a banking license. There is no point having multiple regulatory licenses in one jurisdiction, and therefore, rather than maintain that license and ultimately the cost of maintaining that license, we decided to diversify ourselves away from that, and ultimately, create some value from it. So that was really the rationale behind that.
Shall I take the second part of that question?
Yes, I was just about to say that.
Yeah. Can you talk about the auditor's concerns regarding impairment of its carrying value? So that was really centered around the fact that you might recall that in early 2023, we announced effectively a rebasing of the measurement periods of the earnout. So they all got pushed back a year, and effectively that was a trigger for remeasuring the deferred consideration expected under the deal. So I wouldn't say it was a concern, albeit it was a key audit area of the auditors, because obviously effectively they had to re-audit all of the kind of deferred consideration and resulting goodwill that arose from the transaction. And one thing I just wanted to add, in case it wasn't inferred from what James has said, what was left in the entity that we're selling is the API license that James covered. But to be absolutely explicit, all of the revenue and customers and employees had been transferred over to Finsettia a long time ago.
Next one is on strategic partnerships. Strategic partnerships for funding solutions. How does this enhance your offer and contribute to future revenue growth? Good question. Ultimately enhances our offering by allowing our business customers to effectively have the option of funding. And now we don't want to do funding ourselves. This is not our area of expertise. But in order to facilitate that, we did partner and have partnered with a third party just to allow them. Ultimately, we never saw this as a product to move the needle. It's very much a value add for our customer base, our current customer base. So that's really on the lending side, we're not going to be going into that area of the market. That is not within our wheelhouse. We're very much sticking to the payments. What's on store as far as strategy activities milestones are concerned for 2025 and 26? I mean, ultimately, the strategy will remain the same. The three key pillars will remain the same in 2025, 2026. We don't expect to diversify away from that. The geographical piece will take up, a fair amount of effort. It can't be underestimated. Getting regulatory approval in these jurisdictions is hard. There is no getting away from it. If it was easy, everyone will be doing it. Ultimately, what it does do is create value in the business and for the business and for shareholders, but also it gives us the ability to acquire local banking relationships, which is absolutely critical. This is probably one for you, Judy. Are there any plans to start building your treasury shares holding for use in employees' incentivization, share options payment, possible M&A?
I think we're probably a little bit early in on net cash generation for that. Not something I would want to therefore consider at this stage, but definitely something we could look at, or I would expect that we would look at. Certainly buybacks, of the share options that are out there. That's entirely likely, I would say, over the coming couple of years, once we've built up a bit more of a cash reserve. I'll take over for a short while, James, if that's okay, just to give you a bit of a rest. There's a couple of questions on the same theme, so hopefully I'll cover that. Please, can you give a little bit of colour with regards to revenue in the second half of 2023? Is there any reason why we couldn't match that level in terms of step up in H1 2024? So I think one of the things you've seen in our 2023 results is that growth in the high net worth individuals kind of share of our business. So that went up 11 percentage points, up to 64% from 53%. Typically, those individuals buying property, we do see that property or other large investment assets, we do see that as being a stronger seasonality in H2. So I think that is a big reason why we saw a jump up in H2, as well as continued growth of that revenue line. It is more pronounced in H2. Therefore, we're certainly not expecting continued sequential growth at that level. Indeed, we may even see a flattening off sequentially in H1 2024. As I say, H1 is typically quieter. The other reason I would say that H1 2024 we're not going to see that sequential growth is because we did do the final offboarding of all of our white label clients at the end of 2023. As you may have seen, they contributed £500,000 of revenues in 2023. So we're starting from a zero. Well, we have a zero base for that in 2024. So hopefully that gives you some flavour on that question.
And just to reiterate on the white label piece, part of the reason for doing this is very much so we can focus all of our efforts on direct revenue. Now, doing white label business does take the focus away from what we're doing. Ultimately, it's an operational drain, it's a cost drain. So whilst in the very short term, yes, we lose a small amount of revenue, in the longer term, it sets us up to do much more direct business. So that's very much the thinking around of what we did there.
Yeah. Can you provide more information on the outstanding loan notes? Sure. So 2.2 million of loan notes at the year end. 200k of that is due for settlement in September of this year. So that relates to the small acquisition we did in 2022 of Pangea FX, and 2 million due for repayment in August 2026. Both the loan notes are non-convertible. It's important to note that, and both carry a 6% interest coupon.
Your clients are primarily high net worth individuals. Can you give some insight on what that means? Are they business people, etc.? A wide variety. They tend to be global citizens. As I mentioned, all of our clients are introduced by the likes of lawyers, accountants, etc. But they tend to be individuals that are investing either in property or art or whatever, and they tend to be repeat, albeit not regular repeat, but they tend, due to the nature of being high net worth, tend to have more than one transaction, so they tend not to be one-offs. This is probably one for you, Julie.
Yeah. Why are you able to run your business with less cash on the balance sheet than your peers? Well, I can't talk to other businesses, but we typically, as you may have seen, we do not count client cash on our balance sheet. I've certainly seen in other industry quoted peers, they have client cash on their balance sheet and then might show a net cash measure. In terms of regulatory capital, it is actually a net asset measure, albeit obviously that has to be underpinned by a strong balance sheet. But there is no actual cash requirement, albeit as we go into some of the jurisdictions in our geographic expansion, they may indeed require actual physical depositing of cash. One feature I'd also probably point out is when we operate as a riskless principle, so that we're immediately backing any of our trades. So there's no concept of kind of risk there. Our only risk is kind of the small default risk if a client doesn't pay market movement. And then lastly, I would probably point to the fact that the vast majority of our book is done on spot. So I think in 2023, 97% of our business was spot. So again, we're not having to support any of our clients, for example, in margin-free forwards.
Can you please provide more detail on growth potential of the business over 4 to 5 years and how you plan to get there? Very much in line with the strategy. I think creating value from a geographical expansion point of view is critical, allowing us to partake in revenue streams just outside the UK. And again, how we get there: regulatory approval, banking partnerships. Absolutely critical to do that. Key for me is having the right people in place and the right, certainly, country managers, plus also salespeople. So there's a fine line to tread here, but ultimately it's about choosing the right people to head up those various jurisdictions. So critically for me, over 4 to 5 year period, creating value is very much around the geographic footprint, but also product as well. So ultimately, the card is first of hopefully many. There will be other product launches coming along, all to do with payments and very much sticking with our core business, but variations on that theme. So that's where we're certainly heading to. Will the company name change take place before the card launch? Sounds sensible. It does sound very sensible, and it certainly will do. And in fact, all the card approvals have been done under the brand in Finseta. And in fact, we have actually changed the regulatory company, Finseta Payment Solutions. That has happened. We will be changing when Companies House decide to do it, the PLC as well. We were hoping that it would be done by now, but ultimately we're expecting it to be done very shortly.
I'll take one here. Why was there no trading update for Q1, and could you give us an update for Q1? I think really the fact that we did release a trading update for Q1 is really testament to the fact that we now have very good analyst coverage. So you may recall the last quarterly update we gave in at the end of Q3, SureCap had actually yet to initiate their coverage at that point. So I think now, we're working, very closely with them. They're very well informed about the developments within the company. So feel that the kind of market has pretty good insight into where we're at. And I think, not many small caps do quarterly updates, and the fact we did in the past was more of a symptom of the fact that, market expectations were probably not fairly matched with where our performance was.
A good question here. What do you see as your USPs in a crowded industry? Absolutely right, it's a crowded industry. Our USPs, one of the key ones actually, is that we're dealing with not only businesses but individuals as well. Most payments businesses within the sector at least have gone down the strategy of being very much focused B2B. We actually have almost gone the opposite way. So whilst we service businesses, we also service individuals as well. And again, and this may cover another question further down, ultimately all coming through a growing introducer network. So unlike others, we do know above the line marketing, it's all relationship driven and very much focused on the relationships that we have with our introducers. Which really is a genuine USP. This might be one for you, Judy. Do you have any mid or long-term revenue goals?
Thanks for that, James. I think as you may be aware, SureCap have initiated an update on us this morning. I would say that has modest uplifts in our revenue for 2024 and beyond. But really, I would say there are plenty of growth opportunities in the hopper that we're being fairly conservative on right now. So I think our view is very much we're proving out our jurisdiction expansion. If we can replicate that across multiple jurisdictions, which is certainly our ambition, you would very quickly see us kind of edging to 50 and then 100 million revenue. But obviously, as I say, that's not something that's reflected in our analyst analyst coverage right now until we prove out the success of that.
And then the final one, I think, to be covered off, current management expectations are in line for this year. Can you give some comment as far as you are able on the kind of growth you expect, as last year's was obviously exceptional?
Yeah, I think absolutely. We're definitively not going to see 100% growth again. I think I still very much see that we're a high growth company, and I think that carries with it a certain expectation of revenue growth, of around the 20% mark. But I think management expectations, again, we're cautiously mapping our opportunities, cautiously spending, and mapping revenue in kind of at the low end until they're proved out. So I probably can't give you any more of a flavor of a definitive number, but hopefully a flavor there.
And I will add to that, as a team, as a business, we're very, very ambitious. We believe this business can be a significant one in the payment sector. So with everything that we're doing aligned to our strategy, we genuinely believe this could be a significant business. I think that's all the questions, so I'll hand back to Jake.
Perfect. James, Judy, that's great. And thank you very much for your presentation and for addressing all of those questions that came in from investors. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But James, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yeah, absolutely. Well, thank you for listening today, firstly, and thank you for your support. As mentioned, we are a ambitious business. We've changed significantly over the last few years. 2023 has really been a milestone year for us, and I think sets the scene for the future of the business. I think the name change it is significant for us. I think, Cornerstone, part of the reason for doing the name change was to allow us to own within a domain a specific name, which we certainly have done with Finseta, and I think that sets us up for the future. And we've done a lot of hard work over 2022 and 2023 to create the building blocks for a very, very successful business.
Perfect. That's great. James, Judy, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Cornerstone FS PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.